So Ken and I became friends after we met in 2019.
Yeah, so we were both at a private equity conference in Laguna Beach. Well, we figured that if we could bring everybody in that a non-sales in a non-sales way and just talk candidly about gold and about wealth management and about crypto. Well, last year we had crypto, oil and gas, real estate, what's really going on.
So I'm curious about Ken's perspective. Yeah. What do you think is going on with the economy?
I think that interest rates are going to be high. For when I say high, I think they're going to be in the 5 to 6.5 range for the next 18 months. I don't see them going down much. The Fed, they basically they said they were going to raise rates, of course, but they also said that they were going to raise them at least 2 more times before the end of the year. So, like, if you look historically, these rates are average. They're just not average to people who just started. So, those are the ones that are kind of shocked. So what has to happen is the prices have to come down, and as certainly they are on commercial real estate, and they're starting to a little bit on single family here and there, depending on where people are moving out of mostly.
Talk about that a little bit about unemployment. So a little bit more further on that, because that's something that I don't think everybody, I know I didn't for a while, about how unemployment has to go up in order to help out the economy.
Yeah, so I actually just looked this up this morning because I knew you were going to ask me this question. There's a couple different views on this, but the Fed has publicly said that they want the unemployment rate to be around 5. So just Google that, you'll see. There's been multiple people that have said we think that it should be around 5. And around 4.5 to 5 is what they believe is stable. So whether they're right or they're wrong, that's what they believe, and that's what they're saying. So right now, I think this week, it said 3.7, I think. I think it was 3.5, maybe 3.7 right now. 1% represents 1.6 million people. So there's 162 million workers right now. You can go to different websites, and you might find less and more, but the one I looked at was 162 million, so 1% is 1.6 million. So if they do that, what that means is that they're going to force unemployment more, because more unemployment, more people out of work takes pressure off of wages. So it's kind of the opposite of what you would think the Fed would do, but that's actually what I believe they're going to do.
So, and even something we've talked about before when it comes to, supply and demand chain issues and stuff, when it comes to builders, there's a lot of speculation depending on what market you're in. For single family, supply still is a total issue, right? There's not enough supply there. So despite the fact that even though unemployment might still be going up, people might lose their jobs, there might be some people that have to sell their homes. In certain markets in the U.S., supply still is a big challenge. And that doesn't mean that prices are going to drop so much. If some of you guys, depending on which part of the country you're in, already know that you haven't seen much drop in certain markets, maybe the upper echelon homes have been seeing some prices drop for sure. I know some homes here in Scottsdale have seen $500,000 cuts and so forth, but I believe it depends on where you are specifically. Buyers right now, in our opinion, in single family are nervous, so they're a little bit scared. Like investors, some of you guys invest in single family, and this is all I do is single family. The investors are kind of nervous because interest rates are so high that they're like, how does this cash flow? I just lost a bunch of money on the flip, right? I lost $150,000 on flips last year, right? And that's not fun, but that's just I had some high-end homes that dipped. That's just what it was. It's a good thing we do more than just a couple homes. But that said, that can cause a lot of fear on an investor side, whether or not they double down and keep going forward. But what about that seller? Is that seller scared right now? What about multifamily? You seem to be good at that. And there's a lot of people here that are interested in multifamily. There's a number of vendors here that do it.
Yeah.
I know there's a number of people that are currently doing multifamily deals that they're in the middle of it that might be in trouble right now with the way that cap rates have gone, as well as the way interest rates have gone and what that's doing for them. But what about the future of multifamily?
Well, the one thing that's going to be clear about multifamily in 1 year from now is that the properties will still be there.
Yeah, the properties will still be there. Maybe not the owner.
Yeah.
Yeah.
I think a lot of it's going to depend on the capitalization of the partnership, what they've done in the meantime while we've had 10 rate increases, and whether they have rate caps and they can cover it. So it's kind of all over the map. What I mean is I've looked at properties, but there's no question that cap rates have gone up. When you have 10 rate increases and the cost of borrowing has gone up, you're going to have to pay less for that exact same property. So So what's happened? So cap rate or the interest rates are not a direct lever to increase cap rates, but indirectly they are, because the buyers are looking still for cash flow. Like everyone here is still going to look for cash flow, and they're going to say, if I'm going to put $1 million into a property and I want a 7% return, I want 70 grand a year in cash flow, or that's how it works. And if that debt goes up, and all of a sudden that cash flow goes down to 30 or 40, now they're looking at a 3 or 4% return, and they'll probably pass. And then the seller is going to be in a position where they're going to have to lower their price to be able to accommodate the higher cost of debt. So that is how cap rates actually have gone up. So that's happening. We're seeing 20, 30% repricing on commercial real estate.
All right. So what's that mean for us?
What it means is if they have to exit for some reason, what that's going to do, it's going to clean house. It's going to those will make their way through the system, and they'll trade to someone else.
There's definitely opportunities in all these things. Like some of us got started when there was a massive amount of foreclosures and everybody was staying out of it, right? Some of us got started pre-2008, 2009 class. Some people just got started in the last few years, and this is all new to them. Either way, no matter when you're starting, I believe there's always opportunity, just like you believe that as well, despite we're saying gloom and doom in so many ways. If I'm sitting there and I want to be able to figure out, how do I hedge with my family? How do I protect my own household? How do I make sure that I can find a way to become more financially independent in the next few years, if not maybe a few years out, who knows? Is there something else I could be focusing on besides just real estate?
Yeah. Well, first of all, I think there's, you got to have 2 or 3 side hustles, whatever they might be. But the key to this next period of time, I just tell everybody, you got to survive to 25. That's what we have to do. You have to figure out a way to hedge any losses that you might have. If rates are going to go up, the Fed's saying they are, and they could go up higher, who knows? You should hedge the up or get out of the property, take your losses, and, like you did.
Yeah.
Right? You did that, right?
Yeah.
Yeah. So you got rid of a couple buildings.
Yeah, we got some bad buildings in the sport. That's why I like single family a little bit, is that you can get rid of a couple of units, not all your units, like multifamily. That's something that I like to do. We also hedged it a bit where we have a couple more companies now. So we have our hard money company, we have a fixated capital or fund that we do for single family, and then we have fixated events. So
yeah.
So things change, right? The events industry, believe it or not, is actually slowing down on the real estate side of things, but it's picking up in other aspects. But hard money is picking up, and then you also have real estate. I believe single family is still definitely a great place. That's for us, but not in every market. But finding side hustles is always a good thing. Anything else, Ken?
No, that's good. I appreciate you all. Thank you so much.
Thank you, everybody.